Okay, so in this video I'm going to explain about the standard costing under managerial accounting. So make sure that you have subscribed on this channel and also like this video. As we are approaching exam, you should expect more videos so that you will get the notification bell whenever that I post the video. So this topic is only simple if you know the formula. Remember, once you are unable to pick up the correct formula, which means that the figure that you are going to calculate is going to be incorrect. So you have to make sure that you are familiar with the formula and you know the meaning of this formula. So the first formula is dealing with the material price variancy. We want to, in other words, on this formula, we want to see the material price that we have budgeted and the actual price that we spend. So when we talk about the standard price, this is the price that we have budgeted before the actual price that we paid has come. So SP simply means that the standard price minus the actual price, then we multiply by actual quantity. So formula number 2 is material usage. So this is dealing with the material that we have used. So in this formula we have a standard quantity minus the actual quantity, then we multiply by standard price. So the standard price is the same one that I explained at the beginning, is the same as budgeted price. The actual one is the actual price that we have spent, the actual quantity that we have used. Standard quantity simply means that that's the quantity that we have budgeted. Okay, then the labor rate, we want to see whether the labor rate has been used sufficiently or not. Okay, so the formula says that we have to take the standard rate, then we compare it with actual rate. So if the actual rate is higher, this simply means that we are on unfavorable. Why? Because we have spent higher than what we budget. This is not good for a business. If we plan that we're gonna pay 50 rand and at the end of the day we end up paying 100 rand, that's called unfavorable. All right. So we also have a labor efficiency. Then we have a standard hours minus actual hours. Then we have to multiply by standard rate. Okay. Then formula number 5, a fixed overhead expenditure variance. We have to take budgeted fixed overheads, then we subtract with actual fixed overheads. Of course, if budgeted is higher than the actual one, which means that we are unfavorable, but if the actual expense is higher, which means that we are on unfavorable because we spend more than what we budget. All right, then the other formula is variable overhead expenditure, where we have to take the standard rate minus actual rate, then we multiply by actual hours. Okay, so that's the formula that you have to know in order for you to be able to answer a question like this. Okay, let's go to the question. Then we have been given the scenario. They said Nobi Ltd operate a system of standard costing in respect of one of its product which is manufactured within a single cost center. Okay, then we have a standard cost card at the product as follow. So those amount that we've been given on this box, we call them a standard cost. Okay, Then we have a direct material, we have direct labor, and variable factory overheads. Then they give us that per 5 kg is 5 kg at 420. Then direct labor is 3 hours, which is 3 rand per hour. Then variable factory overhead is 1 rand 20 per labor hour. Then they give us the total manufacturing cost. Then the production schedule for the month of June 2012 require completion of 40,000 units. However, 40,960 units were completed during the month without opening and closing working in progress of inventory. Okay, then the purchases for the month of June 2012 amounted to 225,000 kg of material at the rate of 450 per kg. So the production and sales record for the month show the following actual results. So this column is showing us the actual results. Okay, we have material used, we have direct labor, 121,200 hours. Then we have variable overheads. Then we also have sales. Okay, then on the required part, they said calculate the material price and quantity variance based on consumption of material. So the first question, they said we have to calculate material price and quantity variance based on consumption, which means that the formula that is going to be applicable is formula number 1 as well as formula number 2. Okay, let me copy this formula here so that we can analyze when we were able to see the formula. Okay, you don't have to worry about the numbering. Okay, yeah, let's start with material variance, material price variance. So in this formula, we have to take the selling price, the standard price, then we subtract the actual price, then we multiply by actual quantity of material. Firstly, let's look at the standard price, which means that we have to check at the first table. Direct material standard price is 420 per kg. Okay, we have to say 420 per kg, then we subtract the actual price. Okay, let's check the actual price that we buy a direct material. Okay, look at the second paragraph. They say the purchases during the month of June 2012 amounted to 225 kg of material at the rate of 4 rand 50. In other words, we have spent more than what we budgeted. Okay, so that's the knowledge that you have to understand, because on the last question we are required to explain. Okay, then after that you multiply by actual quantity. Okay, so where is actual quantity? Let's go to the table. They say the production and sales record for the month show the following actual results. So material that have been used is 205,600. Guys, remember the other one of 225,000 is the purchase. It's not the one that have been used, which means that the other remaining has not yet been used, which means that the actual one that have been used is 205,600. 205, 205 and 600. All right. Make sure that when you do the calculation for this one, firstly get the answer between 420 minus 450. So if you get the negative, you have to know that we are on unfavorable. Why? Because what we budget is less and what we actually spend is more. So the amount that I got on my side when I calculate is 61 and 680. Then you indicate that is unfavorable. Unfavorable. Okay, that's what you have to do on the first one. Now let's go to the second one. Material usage variance. So we have to use the formula which says the standard quantity and actual quantity. So the simple way to claim this formula, guys, when you have to calculate something like material price, in a bracket we have to see the prices. If you are calculating the quantity, we have to see the quantities on the brackets. You have to compare the quantities on the bracket. Like on this one, we are looking for material usage. That's the quantity of material that we have to use, which means that inside the brackets, we must have the quantities, the standard quantity and the actual quantities. Then we multiply by standard price. Okay, so let's look at the standard quantity. Then we also subtract the actual quantity. Let's go back. Okay, then let's look at our standard quantity. So if you check on the first table, we don't have a standard quantity. So what are we going to do? Okay, so what you have to do first is to check how many products that we have produced and complete. We completed a product of 40,960. So these units that we have produced, you have to convert them into kg. Remember, our materials are counted in terms of kg. Okay, so what we're going to do is to take 40,960, then you multiply by 5 kg that we have been given on the standard cost, so that you will be able to get the standard quantity. Okay, let's calculate this one. We are going to say 40,000 960 multiplied by 5 kg. Then we're gonna get the standard quantity of 204 and 800. Okay, we're gonna get the standard quantity of 204 and 800. Okay, you have to make sure that you put it inside the bracket. Okay, then now we have to subtract the actual quantity. So the actual quantity, we have it on the actual results is 205 and 600. Okay, 205 and 600 minus 205 and 600. Okay, then after that we can now multiply by standard price. So our standard price is 420. The budgeted one is 420. So firstly get the difference between 204 and 205. In this case we're gonna get unfavorable as well, because the actual material usage, it was more than what we budget. Then after that you're gonna get the final answer of 3,360. Then you indicate that is unfavorable. Okay, so this is how you should answer the first question. Now let's proceed to the second question. They said the labor rate and efficiency variance. Okay, firstly you have to pick up the formula. Let's go and take the formula. This formula number 3 and 4. Apology for this. Formula number 3 as well as formula number 4. Okay, let's put the formula down. All right. Okay, let's start with the labor rate variance. Okay, so what we are going to start with on this formula, we firstly have to look at the standard rate for labor rate and hour rate. Okay, let's check on our table. Under direct labor, under standard cost, we have 3 rand per hour. We have 3 rand per hour, which is our standard rate. Okay, we have 3 rand minus the actual rate. Do we have it? Let's go to the actual results. They give us the direct labor in a bracket. They say the total of 121,200 hours. Then they said the amount is 387 and 840. So if you take 387,000 and 840 and you divide by 121 and 200, you will get the actual rate, which it will give you 320. So you have to do that calculation. It will give you 320 cents. Okay, then after that we have to multiply by the actual hours. We have to multiply by the actual hours. Let's check our actual hours is how many hours? It's 121,200 hours. 121 okay, 121 and 200 hours. Therefore, you get the difference first, then you will say equal to, let me calculate this side, is 24 240. Is it favorable or unfavorable? Of course it's unfavorable because our standard rate is lower than the actual rate. Unfavorable. Okay, now let's go to the following one. Labor efficiency rate. Okay, firstly we must have the standard hours, then we have actual hours, then we multiply by standard rate. Okay, let's first look at the standard hours. Do we have standard hours for labor? Let's check. Do we have it? No, we don't have it, which means that we have to go to the production. Then we multiply by our rand per hour. The same procedure that we did when we multiply by 5 kg. So we are going to multiply by 3 hours, so that we're gonna get the actual the standard hours. Okay, so which means that we are going to say firstly, okay, let's calculate on this side. Okay, we're going to say the production, which is 40,960, then we multiply by that 3 hour, then we're gonna get 122 and 880. 182 880. Okay, then after that we have to say minus the actual hours, which we have it, which is 121 200. 121 200. Then after that we multiply by standard rate. So our standard rate, we have it, is 3 rand per hour. Is 3 rand per hour. So the other 3 that we use to multiply by the actual production is 3 hours, not 3 rand. 3 rand is for standard rate. So if you calculate, let me calculate also on this side. 122 880 minus 121 200, then we get the positive amount. So in other words, in this case, what we budget is more than the actual. The actual is less, which means that we are unfavorable of 540 5,040 rand. So in this case we have a favorable because what we spend less than what we budget. Okay, so let's proceed to the next question. So Okay, before we go to number 3, let's first go to number 4. Number 4, it says that this discuss the reason which could have caused each variance calculated above. Note, discuss each variance separately. Okay, number 1, we have a material price. We have to discuss about that. Under material price, the reason that caused this material, the possible reason that caused material price to be unfavorable could be, for example, it could be a wrong choice of supplier. In other words, the entity might have picked up the wrong supplier, which is selling these goods at the higher price. So that could be one of the possible reasons that you have to mention. Then we also have a material usage, which is unfavorable. What could be cause of this unfavorable? Okay, it can be poor training on workers. Remember, if the workers, they are not really sure about what they are doing, the wastage of material could be very high. The other reason could be poor machine. If machinery that we are using is not being maintained, it can cause a lot of wastage. So that can be another reason that we can mention. Then another variance that went to unfavorable, we have a labor rate hour, which means that on this one, there are many possibility. Number 1, we can have lack. Apology. Okay, number 1, we can have lack of supervision. Supervision to employees. If employees are not being supervised, they can do whatever they please during the work time. Okay, then the other one is labor efficiency. So this one, we can comment that is controllable as it is unfavorable. So your discussion must also check the marks allocation. So if the marks allocation is higher, which means that you have to give the more possibilities. So the other question, which is question number 3, I'm going to do it on the next lesson, which I'm going to cover the following question. So please make sure that you follow this channel so that you will get the notification when I post the next video. See you soon.